Okay, hi everyone. There are different ways to calculate free cash flow, and I'm going to illustrate one method. Now, let's assume you have the information in front of you for a company, right? These are in millions of dollars. We've got the income statement, some summary income statement information on the left, and we've got the company's balance sheet on the right, again in millions of dollars. Now, one method of calculating free cash flow is to follow what's given in figure 2.5 here, right? So in step 1, we would take earnings before interest and taxes times 1 minus the tax rate to calculate net operating profit after taxes. All right, so if you were to do that, I'm labeling it A here. In this example, you have earnings before interest and taxes. Well, how did I come up with that? Because it's given right there. Okay, $1,080,000. They tell you the tax rate is 25%, so $1,080,000 less the 25%. You can take 1 minus the tax rate. You let Excel do the heavy lifting for you. You can see my formula. Take the value in E26 times 1 minus 25%, right, times 75%. And that's your net operating profit after taxes. Okay, then you'd move on to step 2. Take the operating current assets minus the operating current liabilities. Well, what you're looking for here is which are the components used in the business's operation as opposed to being held for an investment. Okay, so right away we know we're going to exclude the short-term investments, and over on, that's with current assets, and over on current liabilities, we're going to exclude the notes payable. Again, that's a financing activity. It's not necessarily an operating activity. Okay, so if we list those, the current assets less the less the short-term investments that are a component of it, the current liabilities less the notes payable, we can just see the calculations there. You see it's just, addition and subtraction. Okay, then you go on to step 3 is take the net operating working capital, which we just calculated. That's what NOWC stands for. And add in the operating long-term assets. Okay, so if we look at operating long-term assets, where did those come from? Well, let's go look here. And what do we see? Long-term assets, plant and equipment. Since it doesn't say it's being held as an investment, we can correctly assume that's used in the principal operations of the business. So 3,750 and 3,500 go in there. So to calculate the total net operating capital, we take the net operating working capital and add the operating long-term assets. Okay, and then finally we're going to get to where we're going to calculate net investment in operating capital. So now we take our net operating profit after taxes, that was the 810 here, less the net investment in operating capital. Well, how do we calculate that? We look at the total net operating capital and calculate the difference for the last year. Okay, so if I hit F2, I see that 6,950 minus 6,400 means we increased our investment in total net operating capital by 550. Add those together, and that's free cash flow. Okay, and then the last part of this is, could you calculate return on investment capital? So here what you're going to do is take your net operating profit after taxes, right? And you're going to divide that by your total net operating capital for the current year. And that would be your return on investment capital. Okay, hope you found this helpful.